Hello everyone, welcome back to the USA Gold Weekly Review and Outlook. Today is Thursday, June 22nd. Sorry we missed you last week, just had a busy week, but a lot to cover and get right to it. I guess there's not really anything going on out there. It's kind of boring, nothing really to talk about. Gold,
Thanks
boring.
for tuning in.
Yeah, nope. I guess we're done now. No, but that's kind of the sentiment that we feel like is out there. Gold here, falling back a little bit in the range on the heels of the Federal Reserve meeting last week. We'll get to covering that. But there is this eerie silence. And it seems like, for all that is going on out there in the world, which we certainly see, it's almost like information overload. And there's kind of this whole this desire to ignore it all or not to look at it all, or certainly that's the way it seems like markets are behaving. Everything is just kind of static. And you've got kind of a wait-and-see approach going on all over the place, and it's afflicting all markets, but not necessarily the way things ought to be, I guess. And so, we're going to jump right in. Obviously, Federal Reserve did their meeting last week. Pete, fill us in on the decision. Obviously, they raised rates. We knew that was going to happen, but what kind of came from that?
Right. Well, what sort of surprised everybody is that within the policy statement, there was a much more hawkish tone. And that caught the market off guard to some degree. I think people were beginning to think that they were going to hike rates and then be, kind of equivocate a little bit on September and December, just based on incoming data, which hasn't been very strong.
Right.
But instead, they went the opposite way and said, we're still on track, basically, for at least one more and possibly two more rate hikes in 2017.
It was surprising, to say the least, especially because that very morning, the employment numbers came out like garbage and the inflation numbers came out like garbage. And so, it was
transitory.
But it was interesting. I actually watched the, Yellen presser that followed, and every reporter worth their salt was asking her, well, what about this data that you just saw? Oh, the data is the mumble.
One data point does not a trend make, and yet, if you look back, particularly on the inflation front, the PCE price deflator that they watch, that's sort of their benchmark indicator of inflation, has declined for, I think, the last 3 months in a row.
Yeah, so, exactly. And so, with their two main mandates, which are employment and inflation, both seeming like they're not doing what they wanted to do, certainly not powering ahead, as they say. Granted, the unemployment rate is very, very low. It's at
16-year low, I think.
Multi-decade low, exactly. And so, there's some value in what they are saying, and then you see inflation picking up in some areas, but you're not having this big cross-section performance that they're looking for. So,
there's no wage pressure.
Exactly,
and without the wage pressure, there's no inflation.
Yeah.
And consequently, the consumers are sort of disinclined to spend freely, and the economic growth remains generally stagnant.
And this is what we've been covering forever: is that where this economic optimism is coming from is peculiar.
Well, I think it sort of throws people for a loop.
It does.
They say, what am I missing?
It's
the Fed is
incongruent.
optimistic.
Yeah.
What am I missing?
Exactly. And they're not feeling it on Main Street. It's not actually occurring on the broad swaths of what they're describing. I agree. Yeah. There is this what am I missing component going on out there, and
it's freezing investors, I think.
It seems to be to me too, but yet here we have the Dow, again powering to, I think, all-time highs, 21.5-ish. Not like piling higher in all-time high land, but still maintaining its, stability there near the all-time highs. And it's just created this environment where, it just has this feeling of where's the next shoe going to drop? What is going to cause something to happen here? Because it just doesn't seem quite right.
Well, there are a lot of shoes out there.
There are.
And kind of getting back to your opening statement, people seem to be ignoring them. And so, to the Fed's credit, and other policymakers the world over, they're keeping all the plates spinning at this point. Yeah. Wobbly a little bit, perhaps, but they're all still spinning.
Yeah.
But one of those, I'm mixing metaphors here, spinning plates and dropping shoes, but at some point, one of those is going to fall.
There exactly, and there are. I mean, from the geopolitical side of things, from our own politics here at home, and yeah, the investigations into Trump and collusion with Russia, and true or not, the impact that has to his ability to enact policy.
Right.
And I mean, to me, that's the bigger impact of the U.S. economy as a whole, and passing new tax legislation, and there's just so much going on that could curb, derail everything that we think. It just seems so fragile. If we're even to say that it is there, as the Fed has described it, I think we would say it's fragile at best.
Right, and so taking kind of looking back at the markets, so a lot of the Trump agenda is on the back burner now as he deals with the various investigations and so forth. They trotted out the Senate version of the healthcare reform bill today, but they don't know that they have the votes to even get it through the GOP-controlled Senate. So this will probably be a multi-week process to try and cobble together the votes and stuff. And I think the consensus feeling is that until the healthcare issue is dealt with, budget and tax reform and infrastructure spending is even further back on the extra back burner or whatever.
Well, yeah, no, and then we've got a debt ceiling. We've been talking about this. Debt ceiling debate is coming up. It's right around the corner here, and so we're down a lot of the same paths and a lot of the same problems. We're just revisiting, and the cans that have been kicked are coming up along our walk again. And so do we kick them again, or what happens once we get there? And it just all adds up to a really ironic and interesting environment. And for years, when you talked about the gold market, looking way back, we used to describe the summer months as the summer doldrums. There was this notion of sell in May and go away that even came into the gold market. And it was, we looked at it and viewed it largely as an opportunity. And looking back, it often proved to be from a pure price performance point of view. But it's starting to feel like that again for this summer. Gold has shown a ton of resilience given what it is faced with. Mm-hmm. I mean, there was always this situation where when they raised interest rates or had hawkish tones, gold would get slaughtered. And now gold's down $25, $30 since they did it, and maybe not even that anymore. And so it's got all this stability, all this resilience in this price range, and I love it because finally I think gold is bucking this ultra sensitivity to Fed speak and Fed policy.
Yeah, and to that point, Fed speak has been pretty hawkish as well, sort of reiterating the stance of the policy statement itself. All the Fed minions have been trotted out this week, all kind of maintaining a generally hawkish tone as well, right. Trying to rebuild or keep September at least on the table at this point. So right now the odds of a September rate hike are pretty slim, but they want to have that option to hike rates, but they need the market to believe that they may hike rates. So anticipate a lot of hawkish Fed speak in the weeks ahead.
Well, and it's so much about expectation, and we've talked about this ad nauseum over the years about Fed credibility and what how long can this carry on? And there was I forget who said it. Maybe you can help me with this, but there was an article out earlier the week where basically the headline was investors can't trust the Fed anymore.
Right.
And that we can't really look to the Fed for proper and even honest guidance. And that's an interesting evolution and development that
right.
It may not be playing out this minute, but this is a structural change in the way the markets are going to behave and view things.
Well, just looking at the historical dot plots, their forecasting ability has been abysmal. But again, that might be part of the plan so they have tended to be over-optimistic time and time again, and it's an effort, I think, to manage expectations.
Agreed.
And people fall into that trap, but I think that there's a fair amount of people out there going like, how long do we believe them?
That's the thing. It's like the storm clouds are gathering, and nothing lasts forever. That doesn't stack to the moon, so to speak. And so, here we've got a stock market that just about everybody believes is long in the tooth. And I mean, there was a great article, a great post on Zero Hedge that kind of summarized every bank's approach to it, from there will be tears, this is the most overvalued market in history. I mean, just on and on and on and on. Yet it continues.
So we know that there's that sort of Damocles hanging over the market right
Yeah.
now, but nobody seems to want to move from under the sword
That-
just yet.
just yet.
Because
It's-
I can squeeze out a couple more dollars
exactly right.
of equity.
That's exactly right, and it's all wrapped into this expectation set by the Fed and this illusion, if you will, and it just feels like that's what we're dealing with in this kind of like stunned, notion in the investing public of, well, what do we do? And maybe what we do is pay attention to the silver doldrums, pay attention to the gold stability, diversify while you have a chance.
Right.
I mean, these are obviously we're gold brokers, but this
So
is
portfolio
reminiscent of-
theory would say,
Yeah.
move out of the overvalued market,
And
move into an undervalued market.
And we've been talking about that for years. And gold is really, from a fundamental point of view, it's showing the kind of stability you look for, the kind of base building you look for when you're looking at a market that has bottomed, that is undervalued, that has strong potential moving forward, especially if these other asset classes unwind, which I don't know. I'm a player of probability. It seems like the probability runs in that direction.
Every tick of the clock
Yeah.
gets us closer to that rollover in the stock market, I think.
So here we go. That'll lead perfectly into our golden gong this week, which is from David Stockman. We've quoted David Stockman before. He was the director of Office of Management and Budget under Ronald Reagan, and so that was kind of his, amongst many other things, but his biggest claim to fame, so to speak. But basically, he in an interview, his first reference was that this is the most hideously overvalued stock market in history. Or just overvalued market in history, referring to the stock market. But then he went on to say, you want to pay 25 times earnings going into a world where the Fed yesterday said we're going to shrink the balance sheet by $2 trillion over the next several years, where we have a government that is in total chaos, a president that they're trying to unseat, a debt ceiling that can't be raised, a tax bill that will never pass. And yes, to kind of summarize everything we just said, thank you, David Stockman. We feel like this is exactly what is going on out there, and kind of the hilarity of the complacency of the investor, the wait and see mentality that we're experiencing right now, which is very interesting in context. So to David Stockman, Golden Gong. Thank you very much for watching. I'm Jonathan Casares.
I'm Peter Grant.
See you next week.